All right, guys. What's going on? Welcome back to another episode of The Deep End. This is big number 15, which is crazy. We're starting to get up there. I feel like I always open the episodes with pretty much the same spiel, which is once again, we probably have been talking for 10 to 12 minutes at this point off the recording, and we started to get into this good conversation, and it never fails. You guys will hear it probably 1,000 more times throughout the duration of the lifetime of this podcast series, but it never fails to where we just start talking about something, and then midway we'll stop and it's like, should we be like putting this out there, because this is kind of getting to be good relevant stuff. And sure enough, we had another one of those today. But just to kind of set the stage for you guys, um, you know, behind the scenes, we were talking about just catching up with each other's weeks. And I was telling Ari that we had some friends staying with us these last, pretty much from Saturday to like Monday evening, they were with us. And they were thinking about, they came out here because they're really thinking about moving here to Las Vegas from California. And so those few days we spent just driving around, looking at all the different neighborhoods, driving by schools, just getting a lay of the land and just seeing just getting familiar with the surroundings, getting a feel for the community and where the grocery store is, what life could be like living here, generally speaking. And they really liked it. And this is their second time out here, kind of with this intent, to maybe make the move. And I was telling Ari that now it's kind of, for them, I think it's kind of time to make the decision, because one way or another, it's like you can't just keep chewing on it forever. At some point, you'll have to make the decision. It's kind of like buying a stock. Like, you can do research on a company until you're blue in the face, but at some point, you'll either have to decide to pull the trigger on it and add it to your portfolio, or just move on and invest that money elsewhere. And they're kind of at that point now. And so one of the things, I think, now that it's crunch time, one of the big real things and a big piece of this consideration is, my friend, his job. It's like, okay, that's kind of one of the big pieces to all of this. Is, what do I do for the job? Do I stay with this job and try and figure it out to where I can work remotely? Do I have to find a new job? And that creates a lot of uncertainty in this decision. And so this is kind of where Ari and I left the conversation, or about, he shared with me an example of one of his friends, Ari, and I can let you give kind of some color on that too. Well, why don't I do that? I'll just pass it over to you. But in closing, that's kind of where we're at with my friend here, is this whole job thing. And I think we both have some thoughts on this, and that's where this conversation was heading. And I don't know, it might be relevant. We'll find out.
I think, first of all, there's a beautiful tie-in, and we're going to tie in just how relevant it is in a second, or at least I think I can really make it relevant for us all. But first, I want to apologize to everybody because Ryne and I always do that. I feel like, Ryne, we cut some people, or everybody short rather, when we don't let them in on the very beginning. Because
So maybe
sometimes
we
we say
should
some
like
juicy things.
maybe we should just make it a point, like, as soon as we hop on the back room, which is like, let's just go.
Just
Let's
hit
just do it.
record.
Yeah. Maybe we just do that.
Any, anyways, we caught you guys up to speed, at least, so there's that. But yeah, to Ryan's point, I was speaking with a friend of mine the other day, and to paint his story, he's actually been out of work for 9 months. Now, mind you, he bright individual, and he went to go get his MBA, graduated with the assumption that now he's got the big, MBA behind his name, and he can put his resume out there and go work, and he hasn't found a job. It's been 9 months. Now, there's a lot of different pieces to this. Now, again, I work with a lot of individuals, whether professionally or personally, on kind of, I don't want to call it coaching, because I don't really like that terminology for it. But either way, I just work with a lot of people on getting your life together, mentally, and figuring out your path. And I guess maybe it is coaching, whatever. But I'm speaking to this individual, and we're having this great conversation. And I just noticed a couple of things. First of all, his overall attitude wasn't so, optimistic. It's already been 9 months in, poor him, and how terrible. And then the second thing, he brought to the table was that he did sit with a career coach or career counselor, and she gave him some tips and tricks about, what to do. And he was like, one of the things she told me what to do was build this website so I can have something behind my name. And I kind of looked at him and I go, look, I said that to you weeks, months ago, right? Like whether it's a website or anything else, a YouTube channel, X account, just build something, like build something. And we got into this conversation that, immediately I'm like, you could even get in the community, get involved in the community. What's better than an MBA, just in my opinion, is actually being in the position to be a leader. MBAs, the whole point of the MBA is to make you into a leader. But when you have experience, you are a leader. And so I'm not, I'm all for an MBA. I'm actually going to go get my MBA probably at the latter half of this year or next year. So I'm all for education. But the MBA is for you. The learning is for you. Everything really that involves, in my opinion, growing yourself and enriching yourself is for you. At the end of the day, a company is going to make you a cog in a machine. That's what a company is going to do. And it doesn't matter if you're the CEO, you're the CFO, you're some employee, you're the janitor. Everybody is replaceable. Everybody. I'm actually, Ryne, you'll like this one. I'm reading this book, After Steve. I think, Ryne, you'll really like this one.
Oh.
It's actually after Steve Jobs had passed away, and how Tim Cook and the top designer at Apple, who's the number 2 man, his name is John, I'm blanking on his last name, built Apple into the $1 trillion company that it is. And you look at that, and everybody thought Apple was going to fail after Steve Jobs, but nope, it continues to rise. And so I'm bringing that up just to say, like, it doesn't matter who you are. Everybody is a cog in a machine, and you can either build your own machine or you could be a slave to someone else's machine. And so, I'm kind of sharing that approach with this individual, and I'm like, man, you could build the website, you could build blogs out. He wants to get into the environmental, kind of business, and which is amazing. I said, one of the things you might want to even consider is being a community leader, and actually every single week pick a day and a time and go to a Facebook group, amass a bunch of people and go pick up trash outside, and then blog about that every single week and start to grow a following of people who are literally following you, and you're kind of building up this cleanup schedule, and you're building a volunteer organization. It's better than your MBA. It gives you experience and something to do and all this stuff. Why am I bringing all this up? It's because it all comes down to action. One of the things that Ryne had said just before we hit record was like, it's just a job.
Yeah.
And how right that is. Like, it doesn't, the greatest freedom that I have and that I know Ryne has, Ryne is full-time on YouTube. I've always kind of floated back into the corporate world because I like it, but I'm not bound to it. And I can leave whenever I want, and I've built something already. And so, one of the biggest things I think that we should all be focused on is taking massive action for ourselves and not being the slave to someone else's dreams in the machine that someone else wants you to build. And I want to tie this now in because one of the fear I always personally had, Ryne, was if I don't work corporately or if I don't have an income, how am I going to get the money to invest? Because ultimately, I know that investing is a major ticket to freedom, whether that's through dividends and passive income or long-term, value and growth investing. That ultimately is going to be the eighth wonder of the world, the wow factor on, my financial freedom. But it all comes together here. Massive action. 3 years ago, I could have never have told you that I would now be working in the world of finance with a great firm. I could have never have told you that, I was going to, lead Tip Ranks as head of marketing and head of customer success even before the company I'm at now. All that was from YouTube. And all of that came from building a network, YouTube, connecting with people, building something, taking massive action, not being embarrassed to fail, and realizing that, Ryne, your point of it's just a job is it's just a job. But the real CEO The real leader is the person who leads his or her life on the day-to-day basis and builds his or her own machine for financial freedom. I just spoke a
Yeah.
lot. I don't know if that resonates with you, but like I'm just like,
Dude,
wow.
it does. I can't tell you how hard it's been to not just like jump in after you're saying something because I agree with all of that. And I feel like I have so many thoughts. And this conversation, I mean, just this general theme is one that we touch on quite a bit. But I think it's one that all of us investors feel like just going back to not wanting to be a cog in a machine. That's something that every investor feels. And when you get to the root of why you're investing, it's so you can pull yourself out of that and have the optionality to not, have to subject your life to that forever. It's that classic Warren Buffett quote. It's the one that got me into investing too, by the way. It's if you don't find a way to make money in your sleep, you're going to work until you die. And unless you win the lottery, you're going to have to come up with the means to fund the money that works for you in your sleep. And that's where the job comes in. And when I think of a job, it's exactly that. It's a means to an end. It's a means to once you have the money from the job, trading your time for that income, it's then using that income. I mean, you obviously have to pay for the necessities, the roof over your head, some of the other discretionary stuff, that's fine. Having that balance is fine. But part of that has to go toward digging yourself out of a position where you are forced to have this job for the rest of your life. And to me, like that's kind of the whole point of the job. It's a means to an end. It's a means to get off the hamster wheel. You have to be on the hamster wheel in order to get off it. Yeah. If that makes sense so far. And so I think that's something that a lot of us investors feel. And going back to this friend of mine, I think he feels a sense of obligation to this company that's been really good to him, to be fair. It's been a great gig for him. So I think he feels a sense of loyalty and a sense of obligation to him, which is, I think, is respectable, and I totally understand it. In fact, my wife and I have had so many conversations about this for her, like in previous jobs, feeling the same exact way. But it's still, at the end of the day, it's just a job. If you're not there, they're going to be just fine. They'll figure it out. They'll move on without you. And frankly, at the end of the day, if push came to shove, I think you'd come to find that loyalty would not be reciprocated. So you always have to keep that in the back of your mind. And so all of that said, it comes to this friend of mine. I guess these are some things that I would, and I might have this conversation with him if we end up talking about it. These are things that he already knows anyway, but those are the kinds of things that I would say to him. And at the end of the day, when you are laying on your deathbed, I think I don't even think the fact that you were so loyal to your job would be something that crosses your mind. I think when you reflect on your entire life leading up to that point, that won't even be one of your considerations. So that's one point in all of this. And kind of jumping over to now what Ari was getting into and his advice for his friend was, nowadays it's easier than ever to create your own opportunities. And I don't know, I know we all have busy lives, especially if you do have a job and family and stuff, but it's good to have some sort of project like this that you can pour yourself into. And the cool thing is, like, you just never know what those things can grow into. And I would, maybe it's easy for me to say at this point, but I think that everyone should try, and everyone should and could have something like this. And I think it would benefit your life in ways that you can't even imagine. So I'm going to throw it back to you, man. I've been talking a lot now too.
Man, I always used to say this, and because I'm a big corporate guy, I always looked at business is business. And anytime there were rounds of layoffs at companies I was at Yelp. I started my career at actually a recruiting firm, and I jumped into a sales position on the first interview because they go, no, you're not a recruiter. You're the sales guy. Right. So I jumped into that, and then I jumped to Yelp, and then I got into fundraising, and then from fundraising, I got into real estate, and real estate into, finance. And everybody always told me as well, by the way, on my journey, don't jump, don't make too many jumps. And I never understood that. I said, don't make too many jumps. Like, what if I have an interest and I want to do this, you know? And I have zero regrets, and I've done everything career-wise that I've always wanted to do, and I've learned a lot. And you know, there are a couple people that I spoke to that are in very well-off financial positions, and they go, "Don't jump." The heck kind of advice is that? You know, and so jump when you need to jump, but just make sure that you're jumping strategically. And that's something that I've always done, and plan yourself out. You know, be methodical about this, because as I shared, one of the biggest fears that I really had was like I always knew I needed to be in the market, and I need to be, you know, using this eighth wonder of the world and really compounding my capital. And so what if I didn't have income, you know, coming in? And that's always a fear, always. And so, you know, I'm always planned out where, like, even right now, you know, I have various accounts where, you know, I've plenty of savings from an old company that I'm completely living off of right now to invest all the earnings from everything else into the market. And it's like this puzzle I'm putting together for myself, right? But what am I getting with this is, if you are going to jump, just make sure you have a plan and don't stop investing. Like, don't put everything aside during these times of trials and tribulations. Just work harder. Like that, go get another job. I had interviewed, actually, Ryne. I don't know if you saw the recent Masters chat that went out, but I found this individual on Twitter, X, and he's a 21-year-old kid who already has, you know, six figures, and he did it through means of basically in 2020 building this Pokemon trading card business and sports card business at auctions. And then he invested all this money into growth stocks that, you know, did really well for him. And a 21-year-old kid with six figures. I've spoken to 30-year-olds and 40-year-olds, sometimes 50-year-olds didn't even have six figures in their savings account. You know, and this goes to show, like, when I really asked him, like, what was he doing? He's like, man, I've had jobs at Costco. I've had jobs at Walmart. Like, you're hustling. And that was the same, you know, for me. And I think it was the same for you, Ron, where it's like, you're always working. And the key is, if you're going to be successful, I think, in this life, don't slave away to then go, you know, work for your coffees and your nights out and your dinners. It's like, you don't have to stop doing all that entirely. But, like, if you really want to set yourself free, you need to do this one thing: investing. You need to. And that investment account, that's you paying you. That's the big CEO move. And as far as business being business, you know, it was, again, like I said, always my approach during rounds of layoffs. Thank God I've never been laid off yet. It could always happen. Who knows? But I always would shake hands, you know, during these rounds of layoffs when I'd go to meet either with the CEO or whoever was doing the rounds. And I put out my hands. I say, look, if it comes down to it and you need to let me go, no hard feelings. Business is always business. There's no emotions in business. Now, again, I was never let go, but, like, when you have that mindset, business is business. You can walk away from jobs and knowing that there's no hard feelings. Opportunities are coming. Sometimes they're better for you. Sometimes they're worse for you. Sometimes you need the lessons. And I just think, you know, I'm watching a lot of people, Ryne, who aren't in our position and kind of living this, you know, life that they complain about, you know, and they want out. They want out. But they don't take the necessary jumps. And so I guess I want to throw a question your way. Even when it comes to your friend and even my friend, because after I even gave him the advice, like, you know, it's still like this intrinsic lack of true confidence and belief and security in oneself. How do you get that?
How do you get the confidence and security in oneself?
Yeah, how can you
Well,
build that one up?
I think it comes with time. I think that, let's say, so let me just take a step back and say, like, I was in effect laid off. I was let go from my job. Right. The timing was perfect. It was right as I was moving out here to Las Vegas. And at that point in time, I had already been doing YouTube. And I think I'd been doing YouTube for maybe about a year, which is, you know, not a whole long time. It's not a lot of time. It's really not. Just putting out same videos I'm doing now, a couple videos every week. Um, and in that situation, because I already had something going with YouTube, I mean, it stung. It was a loss of income, but it wasn't a complete loss of income. But because I still like had money coming in from this other thing that I was able to build for myself. And you just never know when those things can happen. Typically, they happen when you least expect them, and so it's good to have something else that you can rely on. And it didn't hurt that this other thing just happened to be something that I loved and that was so much fun. And then that from the start, I wasn't really even like planning to do for a full-time gig. It just kind of you just kind of got thrown into it, and like thank God, because I'm the better for it today. Um, and so is going back to your question though, like in building the confidence that it takes to take that first step forward. I don't know. I think if I really don't know the answer to that. I know from my point of view though, and this is the good thing about any of this stuff, like when it comes to building a presence on social media, which is really kind of what we're talking about as far as like opportunity goes, I guess. It doesn't have to be that either. You could like you said, you can start a blog, you can do drop shipping, you could do Amazon FBA. There's so many different things, opportunities that you can create for yourself. But the good thing about all of them is that you're really not don't have anything to lose in doing so. It's not like you have to quit your job and now start doing this 8 hours a day. It's like, no, you could do it for like an hour a week and build it up progressively that way while still keeping your job. In fact, there's a lot of creators. I know a handful of creators in this space, some of these anonymous channels who don't like the reason they're anonymous is because they don't want their job to find out. They don't want people to know that they do this. And so, which I don't know, I don't quite get that. But anyway, everyone's different. Um, but what I'm trying to get to is you're not taking on a whole lot of risk. You're not taking on any risk by doing this. You can like do both at the same time. And if you keep at it, it gets to a point where you ultimately have to choose, like, do I want to continue doing both, or is it time for me to go all into this thing that I've been building? And as far as like the confidence, you may not have it at first, especially you actually might be scared or a bit self-conscious about what you're doing. I certainly was when it came to starting a YouTube channel. And also when it came to investing, by the way, because in both cases I had no idea what I was doing. So very self-conscious, like very scared that I was going to do something wrong, like make a wrong decision or like look stupid or say something stupid, which I still do all the time. Um, but you do it anyway. Like you start anyway, knowing that those things are probably going to happen and it's all part of the journey. And then, as you get going down the road and you start to see some progress, I think that's where the self-confidence comes from. And there's a term for that. It's called self-efficacy. And they're very similar, but basically self-efficacy is the belief that you have in yourself to accomplish a goal that you set out for. And that can only come, I think, not only, but if you didn't have it before, it can come from just doing something, starting from scratch and making progress in whatever it is. And in doing so, you'll just inherently come to learn like, hey, I didn't know anything about this. I sucked at it at first. I started investing with a $0 portfolio, no money at all. And now after a certain amount of time of just being consistent, here's where I'm at today. And you just do it step by step. And you can look back and connect the dots and say, I did that. I started with no experience. No one helped me do this. And I got to where I'm at today. And I now have a clear path forward. And I can kind of visualize if I can get here today, this is where I think I can be tomorrow. And I think that creates self-confidence, and that trickles into other areas of your life too. Because if you do it in one area, you can apply the same principle to all these other different areas. So I think that's where it comes from. What do you think? That's a really good question.
I agree. First of all, I agree with everything you said. It takes time, and confidence is only built in time. I don't care who you are. You don't just wake up and have confidence. And to that end, I think it's also important to note that you need to fail. I have yet to meet a successful person who hasn't failed over and over and over again. And with failure comes the ability to really humble yourself and be egoless, like whether it's building the YouTube channel or even this, just tap into investing. Sometimes we go to make these investments, or we stop ourselves from making certain investments because it's like, what are other people going to think? What if it doesn't work out the way that I'm intending it to work out? What if I don't get the ROI? And that doesn't even have to be like stocks. What if I don't get the ROI in the job? What if I don't get the ROI in asking that girl out? What if I don't get the ROI on whatever? It's like, screw your ROI, to some extent, right? Like, because I'll put it this way. The last conversation, Ryne, we had last week, I was talking about getting rid of Visa, right? And I was sitting on that decision because I'm like, what if Visa goes up? What if it's not the best time to sell? What? And then honestly, I'm not even gonna lie. I was working on the computer. I fell asleep just like this. And then I just woke up after I don't know, maybe 10 minutes. And I go, just freaking sell Visa, I don't want it. I don't want it in the portfolio anymore. I woke up out of this, nap, and I just went sell, in all accounts. And so I'm Visa-less now, and it feels good because it's just like, take the action. Now, my intention is to reinvest the capital, obviously, and put it, somewhere else. But the point here is I might be totally wrong. I mean, I might just lose everything, right? But here's the thing I always think about. I came into this world with nothing, and I'll go out of this world with nothing, right? Other than the experiences that hopefully I've gifted other people, with laughs and love and memories and everything like that. And so that's the greatest paycheck, I think. And while we're making these investment decisions or life, yeah, honestly, they're all investment decisions, investments in self. While we're making them, it's like, don't think so much about your ROI. Think about your experiences and lessons learned that ultimately build confidence, and that confidence will carry you forward. That's kind of how I'm looking at it, because the more failures that you have, the more lessons learned you really have. I can't think of a single time where I've succeeded and I've been like, let me reflect on this success and really double down on that. No, I've always said, when I fail, let me really scrutinize this failure in quotations, and get all the lessons from this so it doesn't happen again. And that's really building the confidence to then become a better version of myself. And so I love, for me personally, being tested with trials and tribulations and these massive life challenges. It's not for everybody. I definitely don't think, my mentality is for everybody. But I really love being pressed with challenges, because in the heat, there's a massive, massive opportunity for me to fail, or potential for me to fail. And in the failure, I'm ultimately going to gain wealth. And in the victory, I'm going to gain wealth. So I win either way. It's kind of how I see it. And that's the real investment. That's the real ROI, I think.
Yeah, and it probably is cliche to say it's not really failure, but it's really not. There's this Thomas Edison quote, I think it was him, that says something to the extent of, if you tried something 500 different ways and none of them worked, well, you didn't fail 500 times, you just found 500 ways that it didn't work. And that's actually good, because that's bringing you closer. That's actually progress on the step towards success. So, very similar idea, but just kind of a slightly different way of framing failure versus it not really being failure. But that's how you have to look at it. And to your point too, when you have those experiences and you overcome the challenges, that builds confidence too. 100%.
I love it, man. Some of my biggest, investment failures, this is kind of a great segue, but the biggest investment failures, right? Wow. I mean, there are plenty, but one that's coming to mind right now is years back. I was, actually in a real estate meeting, and somebody's husband was, I'm going to leave out the firms, but someone's husband was at this big firm and had this, tip-off that came in that said to invest into this company, Cytodin, ticker symbol CYDY. And I looked into the company, and they had, this drug that was coming out, and all of a sudden COVID hits, and, almost as every pharmaceutical company all of a sudden thought they had the cure for COVID, this company went from like $3 a share to 20. What do you think I did?
Wow.
I bought the stock.
Um,
It hits 20 plus. I said, this baby's going to 30.
oh,
This
there you
this
go.
puppy's going to 50, And what happened? It came all the way back down, to $5. And I
Yeah.
held on to this stock because I go, it's got to go back up. They're going to go through another round of trials, and it did. It went back up to 12. What do you think I did? I held the stock because this baby's going back up to 20, And I did make money on it because I bought it at like 2 something and I sold it around the 6 something. But enough times of being jerked around on that, I'm like, what a moron you are. You could have tapped out at 20, made a boatload of money. Like overnight, it was thousands of dollars I was looking at. And I was like, oh my God, but no. So one of my greatest lessons learned, and not only that, a lesson learned, but a funny story. And so where I find my ROI here, my real ROI wasn't from the intrinsic value and the money added to my account. It's actually the laughter I get from sharing this story and passing it on to be like, don't be me, don't be such a moron and caught up in that. And I think that happens to everybody at some point in their investment career. That was like the first like penny type of stock that I went into, and I was like, whoa, I was really, my dividend portfolio was 40 dividend stocks strong at that time. So when I saw this one stock, I was like, whoa, never again. It never happened again. I will
You were
never do it
like,
again.
you were like, screw Coca-Cola. Coca-Cola's not going to, it's not
It's
going to
like, what is
quadruple anytime
this?
soon. Yeah. That's
So,
funny, man.
this is the real, in my opinion, ROI. And at the end of the day, I always think about this. When I die, I don't really, when people are at my funeral, I just kind of think about it. I'm like, I don't really want people there saying, that Ari Gutman guy was so safe his whole life. Like he played it so safe and just got a job. And I heard this from someone I used to work with. Job stands for Journey of the Broke. So he got a job and worked this job for decades. And there's nothing wrong with that, right? But at least for me, I want to keep growing in all these avenues and capacities, explore things that I love. I don't want to be a slave to the system. I want to build my own life up. And what like even if I lose all my, and now kind of with my portfolio having altered the way that it did, I mean, I'm not basking in over $250,000 at this point still. I'm still at 200, I'm down at 238 something thousand. I'm like, I hope this doesn't go to zero, I don't think it will, but if it does, what if it does? Like, you ever think about that? Like, what if it does?
Yeah, I do. Like, I don't know. What can you do? I mean, it will definitely sting. We're in big trouble if that happens. I do know that much. I just think it'll be absolute chaos.
What would you really do?
For sure.
Like,
That's
let's
kind
just
of
say,
just,
like,
well, it depends why it happens. Like if it happens just because the economy's like that bad and stocks just end up being that bad, then I don't know. I'd try and hang in there and hope it recovers. But the only reason I could see everything like that going to absolute zero is if there's just some sort of just huge financial reset. Things just here in the United States as a whole just really get flipped on their head, and the whole financial system is just like completely broken. That's the only thing I could think of that would really make that a reality. And gosh, knock on wood. In that instance, I don't know. I don't know what I would do. It's not like it'd be any good to sell those stocks because they're already at zero anyway. So, truthfully, dude, I don't know. Fortunately, I have cash, outside of my brokerage account. So at least there'd be that, and I wouldn't be completely broke, but it would sting. It would definitely sting. And I would feel so bad, because this isn't just like my portfolio that I'm building. This is like my family's wealth that I'm building. And I'd feel really bad if that was the case. So, but what can you do? What
I'll say
what would
this.
you do? What would you do? Because what can you do? I don't know. You'd smile.
I'll
Oh,
say
you
this. I think from just knowing you. Well, first of all, the great financial reset. I think you just, you threw the term out there for what's going on right now, at least from what it looks like. So I hope you coined that term, the great financial reset. But what would I do? I know you for a long time now, and I think you'd do what I do. Just keep going. You'd build it
yeah,
back up again.
yeah,
And I think that's the difference between a successful investor and a not so successful investor. You've failed before investing. I've failed before investing in some capacity, whatever capacities those are. But we just keep going. We just keep investing. And, like you said, there's nothing else to do. Like, you've lost it all. And I think the cool thing is, when I think about this, if you take the wealthiest individuals in America or around the world, wherever, just the wealthiest individuals, because we always hear about this, you could take them away from everything that they have and they'll build it back. Because it's not, it all comes down to your mindset, and it comes down to your work ethic, your hustle. Like, why are you doing what you're doing? And I think you wouldn't give up, Ryne, because of the family that you're building and everything that you're building up. And likewise with me, it's like we're building things. And when you have that purpose, you are the captain of your ship and you're building something, you can't give up. What are you going to jump ship? Like,
we
you
sure
can't.
we sure have a lot to talk about on our channels and here in the deep end. That's for sure.
Yeah.
But to your point too, man, like, to your point, above all that, like, this stuff is still fun. Like, first and foremost, I have fun having these conversations with you. I have fun making the videos on my channel. So yeah, why would I stop doing that? As long as I enjoy doing it, I'd still just keep on keeping on. Because there's things with investing, and all of you guys know this, with investing, there's so much that's outside of your control. You'll never be able to determine which direction share prices go. Fortunately, we have dividends to help kind of safeguard at least a little bit against that. But there's just so much outside of your control. And on one hand, that can be a concerning thing. But on the other hand, it's also a good lesson to learn, because that's true outside of your portfolios as well. In life and anything, this kind of goes back to the job thing. There's just so much that you can't control. You can't control if your job is going to keep you around for another day. There's just so much that we have no say in. And to some degree, you have to be okay with that, I suppose. So,
I mean, look, that's what happened. That's my story, why when I left Tip Ranks, when I left, it was one day, I was working. The next day, I was given an ultimatum, was never going to relinquish my YouTube channel. So I left. It's that simple.
that's crazy to me, dude. That's still crazy to me.
What can you do? First of all, I think I made the right call. I would never want to, I'm never going to give up on my principles, my morals, and my values, and never give me an ultimatum and force me into a corner. That's a bad thing to do, because I'll just walk away. There's no corner I'm going to chill out in, I don't want to be in a corner.
Yeah.
Don't press me like that. I don't think they even saw that coming, but that was my story. It was like, take one, everything's great, and take two, this ultimatum's in front of me. So it was either option A or option B, and I chose option 3. I created option C and I left, But that's the thing, is like, what are you going to do, in these situations in life? And I think if you just have the attitude of like, never give up, and just keep going. And I also think it's interesting to think about this. That attitude only comes when that's the only attitude you really can have. Like, everybody's always so worried about what if X, Y, Z happens. And when X, Y, or Z happens, you don't just die. You don't just terminate. You're forced to do something. And so who the hell cares if X, Y, Z happens? Again, if I lost all my money in the market, I don't know, just the great financial reset happens tomorrow, and I wake up with nothing. what am I going to do? I'm just going to keep working, keep putting money in the market and rebuild the position. Does it suck? Yeah. But you know how many awesome stories there are out there with individuals who literally went from millions to zero to in debt to back to millions, and like this is life. And those are the stories that I think we're all inspired by. And so I think another thing that I just appreciate living by is like go with the route, the path that's going to help you build a real story that can help people. Who the hell ever like to read about someone who like failed and gave up forever? Like, no one, like what the hell kind of story is that, and who likes to read about the kind of journey of the safe, like just stayed on that balance beam all his life, didn't even want to take any leaps of faith or jumps, and on that is really life, it's, I don't know. This is a great conversation. I never expected it to go this deep, this direction.
Yeah, and that's not to say obviously that like you need to put yourself in positions where you're exposing yourself to like a gut-wrenching amount of risk, but to you do have to, if you want to grow and put yourself farther ahead, you do have to step outside your comfort zone a little bit, but you can do that in a way where it's not completely debilitating, or like that move, if it ends up being a wrong move, is going to take you out of the game. And that's like a direct tie to investing too. And that just goes back to like how, I guess, risk averse you want to be. How many different positions do you want to have? Do you put all your eggs into the concentrated few, to where and maybe this isn't the best analogy, so jump in and help me out if I'm screwing it up, but like, maybe you put your eggs in a smaller number of baskets, and that works out just fine. But if there's anything that goes wrong with one of those select few, then you'll definitely feel that more than if you had a more diverse basket. I think that's the analogy I'm looking for. I think you know where I'm going with that.
That's the Stanley Druckenmiller approach. Put all your eggs in one basket and watch the hell out of that basket.
Yeah.
That's his quote. But and that's, by the way, that's the exact approach that I'm taking now. It's not a comfortable basket to be in by any means. And I'm looking at every day, right? Like, okay, everything that's happening, tariffs, China, Trump, it's like a chess game at this point. You know what? Trump's Secretary of Treasury actually just spoke today, and basically, I think, gave all of us the key in to kind of what, remember last week when Trump was like, great time to invest, wink, wink, and then he pulled his tariff card. But so his Secretary of Treasury came out today and had shared a message to all the biggest CEOs in America. And what he said? The guy goes, stop worrying so much about the tariffs and just get back to business. AKA,
Yeah.
we got you. We're not going to fumble the ball, because and this got me thinking, right? It's like, I don't care about anybody's politics. I really can care less about politics. I care about my portfolio and my earnings and companies that I'm invested in. So how are all these companies going to fare in Trump's economy, Biden's economy, whoever's after these guys? Like, that's all that matters. So I'm looking at this and I'm saying to myself, this is the key in right here. He's telling all the CEOs, just don't focus on tariffs because this is all one big game. And when I think about it like that, yeah, is my portfolio down from the $250,000 that it was just before the tariff games began? Yeah, it is down. But in 5 years and 10 years, are the companies that I'm invested in, that I'm now heavily concentrated in, where were these companies going to be? And so I just have to watch my basket really, really cautiously to make sure that I'm putting the right eggs into my basket, that, check this out, that I'm willing to risk it all for, in knowing that even if I lose, my full conviction was in there.
Absolutely. And the good thing about you, like we keep, like whenever we have these conversations, we always go back to this. Like the good thing about you is it's not just like 3 stocks. You still are not putting yourself in a position where something goes wrong with Google or something goes wrong with Apple, you're done. Like that's a good, the majority of your portfolio. You still have the ETFs, you still have the tech fund, you still have the S&P 500 that are giving you that safety net to where you can make these higher conviction moves, and it's going to be like heads you win big, but tails you're not going to lose much. Which when it comes to stepping outside of your comfort zone, that's and doing things that you might be slightly uncomfortable with, that's the approach you should take, to where the payoff is going to be substantial. But if it doesn't work out, in the grand scheme of things, it's not a huge deal. You're going to be just fine. Whether that we're talking about your portfolio or outside of your portfolio too. So what was I think there was something else I was going to say with that. Yeah, I guess going back to the tariff thing, kind of kind of a slightly different subject, but going back to the tariff thing, that sounds like sensible advice to me. And in hearing that, I'm thinking, yeah, I mean that's kind of like how we've been approaching things in our portfolios this entire time. It's like, it's things are going to work out in the long run. Just work on growing the business and control what you can control. And the cool thing is, like, in my portfolio, it's like, okay, well, Johnson & Johnson just raised their dividend 5%. That news came out yesterday, I think. I think last week Procter & Gamble raised their dividend about 6%. The week before that, or 2 weeks before that, Williams-Sonoma just raised their dividend 16%. So it's like, these things are going to happen that are going to shake things up and cause a lot of fear, but in the grand scheme of things, it's going to be just fine. And these businesses, they're not completely broken just because all of a sudden there's tariffs and the share prices drop. Things are fine. Things are good.
Ryne, there's a lot of people that are going to make a lot of money. They already are making a lot of money. Last week when Trump did what he did, kind of putting the tweet out there, and then, all of a sudden, like, what, it was 4 hours later, announcing the latest tariff updates, and, that it was only going to be China with the tariffs. He had people in his office, and there was that video of him that came out, and he was, I don't know who he was pointing to, but he goes, and he made, $2 million today, and he made, and in my head, I'm like, yeah, anybody who's just in the markets and understanding the name of this game, call it the Trump game, just politics or whatever it is, like, you can go back to even, 2020, 2021, 2022. There was like a period where the Fed would speak, the market would shake, and then it would go back up. The Fed would speak, the market would come back down, and then it would go back up. And every time the Fed spoke, I would come out on YouTube, and I'd be like, buy stocks now, and the market was shaking up, and then a week later it would go back up. And this was it. I think the game now is like, just watch Trump and his whole team. They're going to make remarks. It's going to sound scary. The market's going to shake. We're all waiting now by 90 days, right? Because Trump has the big pause, a 90-day pause. But if you're thinking in days, you're going to screw up. Because the guys who are really going to make money are thinking in years and decades.
Yeah.
And that's
absolutely
where we're getting the wrong idea with all this tariff talk.
Yeah, absolutely, man. And the thing is, going back to, I didn't see what you were talking about, but like him saying this person made money, that person, the people in the room or whatever. The thing is, it's like anyone who just owned stocks that day made money. And the thing about probably all the people in that room is, like, during all of this, they weren't like buying in and out of things and freaking out and selling all of their positions. They were probably just holding on through and through. And that's all it takes, just staying on the ride through the ups and downs of it all. And as long as you are someone who did that, which I think is all of us, I know it's the two of us here sitting here, but all of you guys watching are the same exact way. It's like you made probably some good money that day. I think my portfolio was up about 6.5 or 7% just that day. And
mine was up
actually
10.2.
That's
10.2.
crazy. Yeah, that's crazy, man. And so all you had to do was just hold on, and if you would have done what we said, what we've been talking about these last handful of weeks, just go out and take a walk and don't even pay attention to it, you wouldn't even have noticed. Like, could you imagine if you didn't check if you checked your portfolio today after not checking it for probably 4 weeks or something like that, or maybe 5 weeks, 6 weeks, till the start of the year, you wouldn't have even known that anything happened. And I think that's where I'm at now. I think my portfolio is now about where I was at like at the start of the year. So
Resiliency, portfolio resiliency. Well, if there is a great financial reset with Ryne's coined term, I mean, just follow Ryne's portfolio because resiliency is
no,
the name of the game.
definitely don't do that. Don't follow this jabroni over here in the blue shirt.
Ryne, right before we jumped on, or maybe it was when we jumped on, you shared you had a question, a good question. And I figured,
Yes.
as we were coming up on the almost the hour mark, we'll hammer that question home, and then we'll stop fetching about everything. Yeah.
Yeah, there you go. So this is a really good question that I got from our friend Robert. This was actually this was emailed to me recently, but I think it's a good one for both of us to touch on. And actually, like the conversation we just had about tariffs and the market as a whole is a great segue into this because Robert says this market drop or the market chaos, the ups and downs have been an adrenaline rush for me. I'm conflicted between continuing to dollar cost average into all of my positions versus not funding some and redeploying the extra cash to positions just with current drops in share price or some sort of combination of the two where maybe I dollar cost average into some and then buy the dip on others. But he's wondering what our thoughts are on this situation. What do you think would be the best approach? And for anyone really who's looking to maximize and take advantage of I mean, things have kind of stabilized so far this week, but let's say that there's more volatility ahead. We're in for some more drops. What's better? How do people best take advantage of this? Is it dollar cost averaging across their entire portfolio? Is it just honing in on some select stocks and not buying, everything that they own, but just a select few? What's your what do you think is the best foot forward here?
First of all, I hope you send this to Robert after the fact. You say we hit this one home in a video. Secondly, I think I want to open this up to everybody watching. Drop a comment down there with your thoughts on this because Ryne and I are about to dish out ours, but we want to know yours. Now, my thoughts, first, again, just what a question and great timing for this question. So I'll just share something that recently happened, not only just to me, but everybody in my network of investors that I speak with. And Ryne, you're in one of the group chats where we're sending a lot of memes, and a lot of these memes deal with dollar cost averaging. Don't have money to eat out because I'm dollar cost averaging. Like break up
Ari's
with my
been a
girlfriend.
madman. Ari's been a madman with the memes lately. I'll check Instagram and there's like 8 different things that he sent over, which is good. Like
We're talking like 20.
yeah, there you go.
I wake up and I'm like, ding, 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 ding. and then I get to the phase where I'm like, dude, you're such a loser. Like I'm laughing at myself sometimes. I'm looking at these things. I'm like, oh, this is great, and I send it to you and the guys. But anyways, a lot of these reels had to do with exactly this question. And, here's what happened to me. I was watching the market steadily, decline, and I was dollar cost averaging. And, I poured a couple thousand in, and then the next week the market would go down even more, and I'd pour another 1,000 something in. And then the next week it went down even more. And, I kept riding this, this decline. And I was like, this is great. I have capital. I have more capital. And then all of a sudden, as we all know what happened last week, it just nosedived. And guess who is out of capital? I wasn't completely out. I had like maybe $1,000 to invest on that day. And I'm like, damn, I was so upset. Like I wanted to just kick myself in the face. Like I was like, what a loser, what an idiot. You completely failed as an investor. Because how do you miss the down day, right? Like the mega buy-in day. But after like 30 seconds of thinking like that, like being really hard on myself, I go, but you can't, you could have never predicted that. You could have never, 3 weeks ago, you could have never predicted that the stocks you have in focus were going to hit their all-time lows this year on that particular day. So cut yourself a break. All right, I moved on, made some coffee, had a little piece of cake and whatever. But I think the point that I'm making is like, if you go with the latter approach of not dollar cost averaging and you think that you can time the market, you will set yourself up for failure eventually. And this is not to say that you won't sometimes get it right, but you're not going to get it right because you are, the oracle. You're going to get it right because luck was on your side on that particular day when the world conspired to bring the market down to some low lows. And so did I want to kick myself in the face? Yeah. Do I wish that I invested on the day where everything plummeted into the depths of, deep red? Yeah. But prospectively, I did the right thing. And because I'm not Nostradamus and I can't predict a single thing, the only thing there was for me to do was dollar cost averaging. Guess what? I just replenished my account and I'm ready to go again. And I'm seeing some opportunities and I'm getting back to dollar cost averaging. And it all then comes back to this. Are you in this counting days or are you counting years and decades? Ryne, I'll pass it to you.
Very well said, man. I've got to say, I kind of do a bit of both in my portfolio. There's certain positions that I dollar cost average into, no matter what's going on. Like SCHD and VU, the two ETFs I have, I'm dollar cost averaging into those. Like rain or shine, no matter what's going on. I at this point, I'm not adjusting my contributions either. It's just a set amount every. Go ahead.
Do you have a set day for that? Like when you SCHD it, do you have a set day that you're like, okay, Tuesday, 3:00, boom, that's it?
Yeah, I do. And it's only because I use M1 Finance. Like it's completely automated. That's my Roth IRA. That grows completely out of sight, out of mind. I don't have to lift a finger. It happens on a set schedule. But every Monday, like the money gets transferred over and it gets purchased like first thing Monday morning into both of those ETFs. Like I said, no matter what's going on, I'm dollar cost averaging into those. And generally speaking, I think when it comes to ETFs, that's a good way to go. I think you can get away with dollar cost averaging more into ETFs than you can with individual companies. That's not to say that you can't take the same approach with individual companies, but it's a bit different because it's easier to look at particular companies and say it's a good valuation right now or it's not a good time to buy based on its valuation. And so when it comes to individual companies, while I do dollar cost average into my portfolio and invest every single week a set amount, where that contribution gets allocated is different depending on what I think is an attractive stock to buy at that point in time, and that's going to change. And like for example, like lately, it's been easier for me to buy something like Johnson & Johnson, which is just below my average cost per share. It's just below my cost basis. So I can dollar cost average into it and bring my cost basis down, which is going to just help me establish an overall stronger position with that position. It makes more sense for me to do that based on Johnson & Johnson's current valuation than it does with something like Williams Sonoma or AbbVie, where I'm up. Like AbbVie, I'm up close to 80% on a total return basis. Williams Sonoma, I'm still up like 130%. So to me, it just doesn't make as much sense to dollar cost average into those because the valuation on something like Johnson & Johnson relative to where my position's at just is so much more attractive. And so I think I'm a bit more selective on the individual stock side of things, and that's how I reconcile those two things, dollar cost averaging and just selective investing. And with that said, too, you could just as well, like going back to my example, I could just as well dollar cost average into Williams Sonoma or AbbVie and be fine. And one of the reasons that would be fine is because, at the end of the day, if you're buying dividend stocks, yeah, I mean, you want to see the share price go up and you want to get the best bang for your buck in that regard. For more reasons than one. But at the end of the day, like in the grand scheme of things, you are buying it to receive that cash flow. And so it should still work out fine if you were to dollar cost average. It's just, it's just not as ideal, I suppose. It may not be the best. You may not always be getting the best bang for your buck. And I would imagine I guess that's true with ETFs too, because, the S&P 500 is going to be higher sometimes, it's going to be lower sometimes, but generally you invest in the ETFs so you don't have to worry about those things. You don't have to worry as much about timing. And that's kind of where I kind of settle between the two. And maybe that makes things a bit confusing, but that's how I try and look at it.
No, it's a great approach. I do, by the way, the same thing every week, the S&P. If it's not the S&P, it's the tech fund. And I pick one of the funds to just, no matter what I buy in a share, the only thing I don't do that differs from you is it's not like set every Monday morning. Or I try to figure out, okay, on Sunday, I'm really trying to figure out the scope of the market. And then I see, to the best that I can, where the market may be. So I can at least buy on a red day as opposed to a green day. But if by Friday I've completely botched the whole thing and I just did a terrible job at doing my job as an investor, well, then it doesn't matter. I just buy and kind of throw the Hail Mary, doesn't matter for the decades approach. But no, it's just such a great question because I think it gets a lot of investors. And I'm also the same approach where it's like the ETFs are easy. It's like, when do you buy the individual dividend stocks and go all in? And then, I don't know. You always get faced with that question where it's like, I have this stock and this stock. And it's like, which one do I, want to scale up? And I think only more recently, after a decade now of investing, I've begun to be more comfortable with decision making on which stock I need to build up. It's kind of like the Visa decision I just made. It was like, well, Visa's a great company and I have these shares, but I'm really trying to build this type of portfolio right now and position myself this way. Now, interesting, if Visa was waste management, I would have never have sold it, which is to say, like, waste management is on my watch list. And about a month ago or so now, I actually made a video on waste management, or it was in one of my listicle videos. And I was like, buy this puppy now. It's a great stock. And it outperforms Visa, both in the year and 5 year, I believe. And just a phenomenal company, I believe. One man's trash, another man's dividend type of speak. And I was like, oh, buy it, and I didn't buy it for my portfolio because I'm like very focused right now on building out these massive positions and concentrated. But if there was one stock I would add to my portfolio right now, like just boom, do it, waste management would be that magical stock that I would just etch in there.
I wouldn't blame you, man. It's so tough when it comes to those trash companies because, waste management, I have RSG, Republic Services Group, on my watch list, pretty much the same thing. And the only reason I have them over waste management is because that's who does our garbage, and so it's like I kind of want a piece of that. But the frustrating thing about them, it's like with Rollins, the share price just, it's I don't know what's been going on with waste management, but it's like Republic I think is up like quite a bit so far this year. So it's actually moved in the other direction as everything else. And so that makes it tough. It makes it so tough to actually start positions in those.
So I'm saying, so when do you bite the bullet? I think that's a great question for the next go round. Is like, when do you actually just bite the bullet and buy a stock because it's a good company,
Yeah.
Anyways,
we want to
bring it home.
That could be a whole can of worms too. So yeah, man, let's take us to the end zone.
Investors, what another deep end episode 15. I feel like we've been doing this now for like ages, and it's only episode 15. I want to make a huge request to everybody out there. The deep end is growing, and Ryne and I are, of course, incredibly grateful, thankful for everybody joining us in these conversations. But, big but, if you are joining us from conversation to conversation and jumping in the deep end with us and not subscribed, we want you to subscribe and join us on this deep end journey, because Ryne and I got big plans for this channel, and we want everybody to actually join us. And guys, leave us questions down there in the comments as well, so we can pack the next episode with answers for all of you. Just want to say again, Ryne and I, thank you for joining us in this episode. And until next week, we'll catch you all there.